Effiong Ekop, my colleague, is in the studio live.
Tulu, marginal recovery in prices, what we have seen. I was monitoring transactions from morning till very late hours. Only very few hours to the closing period that the market changed, to that 0.01%. Before then, we were all, in red. And that's to say that we have to expect that marginal recoveries in some sectors will be what will be featuring any moment from now, especially the banking securities, which Mohammed has said. Expectations coming from the banks and what GC has already shown up. And so it may start from there. But generally, talking about the way the market is going to perform this quarter is not going to be that very strong. So we will be seeing more of negative trends than positives. And the volume will always be shrinking. Look, today now, we have not been able to cover up to 200 million units of shares. In real terms, we are trading 198 million units of shares. Very, very poor. Then the value, just a little above 2 billion. And so we will be doing it in this marginal way, especially in this particular third quarter, and until we allow the markets, to have the effects of political activities and be able to assess where it will go. So the direction will come probably when the results begin to come, and then maybe mid-August, when I think political parties will launch a campaign, and then fund managers will be able to know how to direct their funds. So for now, tight security scrutiny and the holding of funds will be what we will be seeing in the markets.
All right, interesting way to let it slide. We'll continue our discussion as usual. Thank you so much, Effiong Ekop there.
We'll do it tomorrow.
All right, then let's tell you that stocks made slight gains across Asia today, while the euro over-adjusted above parity against the dollar as investors awaited a high anticipated U.S. inflation report later in the global day. Futures were down ahead of European markets opening this morning. FTSE futures slipped 0.24%. Pan-region Eurostock 50 futures fell 0.4%. 46%. MSCI's broadest index of Asian Pacific shares outside Japan gained 0.66%, snapping 2 straight days of losses after having slumped to its lowest in 2 years the day before. Taiwanese stocks led the gains after Taiwan's finance ministry said on Tuesday evening it will activate its stock stabilization fund. The market had fallen to a 19-month low that day. Aviation parts manufacturers Aerowing Technology Core was the best performer today, up 10%. Japan's Nikkei was up 0.37% after losing nearly 2% the previous day. Let's give you one foreign story before we wrap up the show. The European Union body for dismantling failed banks in a fresh move today says it will racket up pressure on lenders over the coming months to bolster their defenses so that none remains too big to fall by January 2024, the Single Resolution Board in its first heat map on progress in preventing failing banks from needing a tax bailout, saying that the shortfall in special debt issuance by banks to replenish burnt-out capital was down to 32.6 billion euros, an equivalent of 0.45% of the total risk pressure. While most banks have met their targets for issuing the special debt known as MRL, the SBR says some lenders still need to improve their other elements, which ensure smooth resolution or winding down if they go under. Well, finally, now oil prices on international market edged up today, a day after prices fell through $100 per barrel the first time since April, but gains were limited by the caution ahead of U.S. inflation data that could weaken the market. U.S. West Texas Intermediate crude recorded an increase of 1.12% to hit $96.91 per barrel. Brent sells at $100.60, registering an upward price margin of 1.14%. Moneylight's performances continue with the losing streak, with a price drop of 3.25%, selling at $118.10 per barrel. For the OPEC basket, crude oil dealers offer $114.30, recording an upsurge of 0.03%.